Revenue recognition, revenue from contracts with customers. Revenue recognition is covered, as you can see, on the CPA exam in Area 3 on the Financial Accounting and Reporting section of the CPA exam, the FAR section of the CPA exam. What are the required sections of the CPA exam? You see from the screen here, Area 3, that covers select transactions, accounting changes and errors, revenue recognition. In revenue recognition, there's 5 representative tasks. 3 fall into the category of remembering and understanding skills. 2 fall in the category of application skills. So that gives you some indication that the American Institute of CPAs and the International Federation of Accountants thinks that revenue recognition is really important. Now, a couple of things. Revenue recognition is covered under U.S. GAAP in Accounting Standards Codification 606, which is relatively new. Accounting Standards Codification, ASC 606, relatively new. It's a principles-based approach to revenue recognition. It's called a single principles-based approach because we used to have a lot of different approaches to revenue recognition. In fact, the Financial Accounting Standards Board thought that we ought to bring all that together into a single kind of a unified approach to think about revenue recognition, as opposed to thinking about revenue recognition in this situation or that situation differently, or in this industry or that industry differently. We want to think about that, kind of bring all that together. And it took a long time. It was really into the 22nd century before we were able to get that unified. Now, the core principle is that an entity recognizes revenue for the transfer of promised goods or services to customers in an amount that reflects the consideration to which that entity making the transfer expects to be entitled to. So I give you something, I expect to be entitled to something in exchange for that. And that's going to be the way we're going to think about the recognition. Now, ASC 606, the Accounting for Revenue Recognition, covers essentially almost all sales to customers, revenue from contracts with customers. 4 notable exceptions. Leases are different, so leases are covered elsewhere. So the Financial Accounting Standards Board's got some different approaches to leases. Financial instruments are not covered by ASC 606. Certain contractual rights and obligations on some specific things like derivatives, hedging, insurance contracts, and certain types of guarantees, not typical guarantees that we make to customers when we sell them products or services, but other types of contractual rights are outside of the scope of ASC 606. And then certain types of non-monetary exchanges are not within the scope of ASC 606. Otherwise, revenue from contracts with customers is all addressed in ASC 606, or that section of the Accounting Standards Codification. And of course, we're following a 5-step model now. Identify the contract with the customer, identify the performance obligations within the contract, determine the transaction price, and allocate the transaction price to the performance obligations. Steps 3 and 4, you could invert the order of those. Clearly, until you know what the transaction price is, you can't allocate it to the elements, to the different performance obligations. Until you know what the performance obligations are, you don't know where to allocate the transaction price. And so those can be done in a different order, a different sequence, but those all need to be done so that you can get to step 5, which is where to recognize, is about when to recognize the revenue. And the revenue is recognized when the performance obligation, so we've entered into a contract, I have an obligation to do something as part of that contract. When I've satisfied my obligation, that's the point at which I recognize the revenue. Thank you.